Hey, good morning, everyone. Paul McMann here with Forex Smart Trade. So happy you could be with us this morning, Tuesday, June 8th, 2021. Forex Smart Trade, our mission is to help you become the best version of yourself. And we do that by helping you become financially independent, by teaching you how to currency trade using our super accurate proprietary trading indicators and our best in the business one-on-one training. And we are so confident in our ability to train you to trade successfully that we have a guarantee. And that guarantee is that once you have been trained, we will let you trade company money and split what you make. With that, in this session, I myself do 2 live trades, one on Tuesday morning that you're attending right now, another on Thursday morning. Same time at 6:30 a.m. Eastern time. Next week we will. Oh, no sound. Hold on here. In the chat, can you hear me? Hello. Do we have sound? Oh, I'm getting a message that I can be heard. Great. Okay. Whoever said they didn't have sound, check your speakers. Where was I? So when this, so starting next week on Monday evenings, we will also start doing a live trade at 6:30 Eastern in the evening. You need to check your speaker. Other people have it, and mute yourself. Let's in this session, what we do is off our indicators. We have a couple different, or at least a dozen different signals. I am going to use 2 of the signals to analyze the market this morning and see if we can find a trade. My bread and butter signal, the one I feel most comfortable with, is something called the 10-point trade. And then toward the top of the hour, we will use a quick little scalp signal called the thick orange line trade. With that, I normally have a disclosure that I show you. Disclosure video isn't working, so I'm just going to tell you that currency trading is risky. We believe if you do it properly, you can minimize that risk, and you can minimize that risk by also using proper tools and risk and money management, all of which we will teach you to do. I work off of a trade routine, which I start with. First thing is it's a little bit like a pilot's checklist. I check to make sure my charts are on and my MetaTrader 4 is working. Many of you now are switching over to the green chart, web-based green chart. So if you're on the web-based green chart, you know you're on. I haven't switched over yet because I'm still used to using the computer version of the green chart, but I am been studying it and fooling around with it, and once I get comfortable with it, I will switch over myself. So I know I am current because I've got a little green box up here and I've got a little green box down here. If this weren't green, this means I'm connected to the internet, or this is red, that means I'm back in time somewhere, and I would go back in time if I wanted to back test. And then my MetaTrader 4, this is a demo account. I know I'm current because I see the numbers all bouncing around. So we've got everything is turned on properly. We did not trade last week because I was in the process of moving. We have moved from Boston area to the Columbia, South Carolina area. So we are in new digs, and we are in the process of so I moved. We're here. We're unpacked, or at least we get enough unpacked that we can do the session today. And we will be updating our office details shortly. So we didn't trade last week, so there's nothing to review. We start every day by, we are technical traders. We trade strictly based on price action movement. Our indicators are very good at picking up when changes occur. So, but with that, news does affect currency, and we want to know what the upcoming news is so that we can minimize the risk of news changing a trade that we thought we were going to take. And we do that by taking a look at Forex Factory. Forex Factory itemizes the news items, and it categorizes it into three types. The yellow is low impact. The orange is medium impact. And we don't have any reds today. I look to find if there are any reds coming up. And if I see a red, I am going to not trade around it. So I want to be not have any positions, holding any positions before a red comes. Some people say they want to stay out of it 30 minutes before. I like to stay out of it 2 hours before, because usually when I'm taking a trade, I'm going for a 10 pip trade, which I expect to close within 1 to 3 hours. So I don't want to be holding something when a news item comes up. Right now, we've got nothing to worry about. So we've got clear sailing. And now I go into my technical analysis. And to start with, I am going to, I use this chart, which I call a composite chart. It has 6 different currency pairs on it. The first chart is all US based, and it is a 60-minute chart. And I start with the middle section, which are the majors and minors. And I am looking for situations where we are either oversold, where the lines are down below the red line, or overbought, where the lines are up above the blue line. And when I see that, I am looking for situations where all the lines are pointing up. So here on the Australian US dollar, we're just about oversold. I've got the minors, the black and the gray lines pointing up, but the majors, the red and green, aren't. So since I don't have that, I'm going to go on to my next chart. Euro dollar, we're in the middle of the channel. Majors going up very steeply, minors going up very steeply. Majors, I don't like to trade when it's in the middle of the channel. I want to catch a trade when it's oversold and ride it all the way through the channel. So being in the middle of the channel, I'm going to pass on that because I don't know how many points are left or how many pips are left in the trade. Pound dollar, oversold. The majors are kind of going up a little bit more sideways, but the minors are going sideways. So I'm going to pass. I want everybody going up, and I don't have it. Dollar, Canadian dollar, oversold, and everybody's coming down. So nothing there. US Swiss franc, oversold, going down. USD yen. USD yen. Overbought. Majors are going down. Minors are going down. I'm not as concerned that the minors have already gone kind of halfway. I'm more interested in where the majors are. The majors are just entering the channel. So I've got what I call 3 points here. 1, that we're oversold. 2, that both the majors and minors are pointing down. And 3, I've got what we'll call the double cross, where the let me turn this on. Not everybody can see. Here we go. Where the gray is coming over the black and the red is coming over the green. So I got 3 points here. Once I have 3 points here, now I'm going to bounce up to the top part of the chart, which we call the TNTs. And I'm going to count how many lines are going in the proper direction. Right now, I've got the orange line going down, thin orange line going down. Thick orange line is going sideways. So I've got one of the orange lines in favor. The blue lines are inversely related. So what that means is when the blue is going up, that means down. So the two blue lines are going up, the thick blue and the dotted blue. So I've got 3 of the 4 lines telling me down here. I want to have a minimum of 3 of the 4 telling me down. So I see that here. So if I've got 3 points here, 3 points here, then I am going to look at my pressure. Pressure lines are going up. Ideally, I want the pressure lines going down. However, I've got the red line on top. With the red line on top, that gives me that counts as a point. So I've got 7 points, 3 here, 3 here, 1 here. I need a minimum of 7 to take this trade. When I see that I have 7, now I'm going to open up a full chart. See if we've got the USD JPY. A little bit more detailed analysis. So first thing I want to do is know where my support and resistance are. So this is a clean chart. I don't normally trade the dollar yen, so I am going to add some support and resistance to this. This chart is going back 90 days. On my euro dollar chart, which I trade primarily, I've used a 10-year chart to go back and put these lines in. So I'm going to put some quick and dirty lines in here. And what I'm looking for is spots where the candles seem to naturally stop. And right in here, you see some stopping. Right in here, you see some stopping. Here, you see some stopping. Here. I want to know where these spots are because they tend to, the candles tend to repeat where they are. So right in here, here, right in here. Let's see if we can get one above and one below. We've got some stopping in here, right in here, over here. And let's see if we get one above. Not quite much depth as I like. It stops it right in here, right in here. Usually, this is about 30 pips. This is about 40 pips, and then this is about 30 pips. Okay, that's all right. Usually on a 1-hour chart, I found these tend to be between 30 and 50 pips. All right, so we've got the support and resistance. Then going back to my pilot's checklist here. I want to know what the trend is. So looking at this, if we go way back to here, we got a small slight uptrend. But it's very small. If we go back a week, we've got a little bit of an uptrend. Week and a half. But really, it's been just trading. It's been trading within this channel here, these two marks. So let me pull this out a little bit. It's been within this channel. It bumps up, went up, came back down, and it's been trading in this channel with a slight uptrend. So I'm trading up. The reason I want to know what the trend is, so I don't have a clear trend here, is that will impact how many pips I want to take. So if I'm trading with the trend, I'll take more pips than if I'm trading against the trend. Now I want to know how much room do I have between each of these support and resistance lines, because that's going to be for a trade off of a 1 hour chart. That's going to define how many pips I want to take. Where is the next support and resistance? So I've got about 19 up, and I've got about 25 down. 19 up and 25 down. So I've got room either way. So once I know that, now I want to see what the signal is. So again, I like the signal. Now, although while we've been talking, the thin orange line is flattened out a little bit. It might be slightly down, just slightly down. The two green lines are up. All right, so I still have the signal. So now I'm going to look at the 2 hour chart. Overbought, everybody's going down, double cross, up pressure, but the green's on top. The lines are converging, so eventually this red line is going to cross over, but I'm overbought. I'm going down. I like that. USD, JPY, so this is consistent with what I'm seeing in the hour chart. On the 4 hour chart, I'm overbought. The minors have already started to come down. The majors haven't turned yet. And I've got a big, the pressure's kind of slightly up, but sideways. And there's a big gap. When I see a big gap here, that usually tells me that this candle, the current candle, is going to come back and retrace what this candle is. So I will see it come back and maybe come down to here. So, so there's 70 pips there. On the day chart, we are oversold, and it hasn't committed to going up yet. So on the 4 hour chart, it's consistent because we're overbought. 2 hour chart, we're overbought and going down. And on the 1 hour chart, we're going down. The 30-minute chart, we're in the middle of the channel. It was going down and it stalled out. And on the 2.5 minute chart, I am overbought and it's still going up. So I like the sell. The question is how many pips do we want to take with it? Let's take a 10 pip sell. 10 pip sell. That brings us down to about this. That brings us down to about right above here. It seemed to bounce here. So this is 12 pips down to here. So we'll take just a little bit less than where it seemed to bounce before. So we'll take a 10 pip sell. To do that, we're going to go back and open up our CoinEx, find USD JPY, click new order. I've already got it open. If you don't have it open, what you would do is you go to File, New Chart, and then find it. But as I already have it open, I'm going to go to New Order. I'm going to check my volume. My volume is going to be determined based on the account balance size. This account is a demo account. It has $10,000 in it. So I am going to take a lot size of 1. And I get that by just moving the decimal place over 4 spots. So 1, 2, 3, 4. So a 1. And I don't like to figure out the stop loss and take profit when I'm taking the trade. I just go ahead and say sell by market. It puts the trade in. It records it below here. I click anywhere along the line. It highlights it in blue. I right click on that line. It brings up this chart. I go to modify. Now I am going to add in my support and resistance. So 10 pips is 100 points. And let us use a 4-to-1 stop. So if I'm taking 100 pips, 10 pip trade, I'm going to use a 40 pip stop loss, putting 400 points in there, and then clicking the little red button. It calculates the numbers for me. And here we are. Now on the stop loss, a part of that is determined based on your risk preference. I like to be 2 support and resistances away. So normally I'm going to put my stop loss somewhere up here. Here's 1 support, or here's 1 resistance. Here's a second resistance. So I usually go out to 109.968. I don't want to be taken out of the trade. And this gives me enough room where I believe I can always work out of the bad trade. So 109.968. So let's go back. I might modify what I'm going to use for a stop loss. 109.968. So I'm going to go ahead and modify that. But you know what? I'm going to leave it for now because in the last day and a half, it hasn't traded there. All right, so that was a 10-point trade. That was a 10-point trade. Now we're going to go take a look and see if we can find a thick orange line trade. So what I did is I scanned the chart, the composite chart, to find a signal. Once I found the signal, then I went to the more detailed chart to see if I had support for what I was seeing on the 1-hour chart, and I did. I found support and decided to go ahead and take the trade. So now we're going to go back, and now I'm going to use a different signal. This trade is a quick scalp, and we take it right at the top of the hour. You can kind of think about it as we're going to catch a little bit of a move that happens. The band has been stretched. If you think of it as a rubber band, and it's gonna come back a little bit right when the new candle starts. So I am looking for situations where this number here is either 0 or minus 100. For those of you using the new green charts, it's going to be 0 or 10. They've changed the scaling on it, and on my chart, 0 is at the top, and minus 100's at the bottom. On the new green charts, 10 is at the top and 0 is at the bottom. So they made it kind of more as you'd expect to look at it. So I'm looking for situations where this is either 0 or minus 100. In your case, 0 or 10. Minus 78 or 79 isn't there. Minus 12 isn't there. Minus 17, no. Minus 77, no. Minus 72, no. Minus 68, no. Now, it doesn't have to be exactly 0 or minus 100, or in your case, 0, 10, but it can be within 10. So if it's at minus 90 or minus 10, it's close enough to 0 or minus 100 where it works. But on this first set, we've got nothing. On this second set of pairs, these are primarily non-US pairs. Minus 33 isn't close enough. Minus 97. So what that is telling me is that the way we've scaled the thick orange line number is it's telling me that it doesn't believe there's any more down in the movement when it gets to minus 100. So if there's no more down in the movement, it's going to start going up. So when we see that, that's the possibility of a trade. But to be a good trader, we want to take trades that have a higher probability of doing what we expect. And to get that higher probability or increased accuracy rate, we get that by finding something else that supports what we're seeing off that first indicator. So this is saying minus 99. I want support by seeing the lines from the majors and minors repeating what I'm seeing here. And that would be all these lines being well below the red line. I don't have that. The majors are still in the channel. So with the majors still in the channel, I'm not as confident about what I'm seeing here to take the trade. So I'm going to pass. Euro CAD, minus 26, no. Australian New Zealand dollar, minus 72, no. New Zealand USD, 67, no. Minus 14 on the Euro AUD, no. So let's go to the next grouping. Australian CAD. Do we have that on that other one? No. All right. Minus 76, no. Minus 47, no. Minus 47, no. Minus 9, yes. That's within 10 points of zero. So now I'm going to look to try to get confirmation. I'm going to my majors and minors. They're all in the middle of the channel. So nope, not there yet. I want to see all of these guys up here well above the blue to decide this is a good trade. Minus 75, nope. Minus 17 or 71, no. So we just went through 18 pairs looking for the thick orange line trade. We didn't get it this hour. Maybe next hour there'll be one. But you can see it just takes 2 minutes to do that. And it took us 10 minutes to do the other analysis for the thick orange line for the 10-point trade. So that is what I have for this morning. Any questions? All right, gang. Let's see how our trade is doing. It's in the money, but hasn't closed yet. I would expect this to close in the next couple hours. All right, great. Thanks for being here. If you need anything, just reach out. We're here to help and to make you successful traders. We're interested in you succeeding because when you succeed, we make money too. All right, that's it. We'll see you Tuesday. And then again, starting next week, we will start doing a Monday evening trade. All right, great. Thanks so much. Bye-bye.